Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so let's unmute now. Alright guys, thank you guys for being here in the live chat. We are currently recording the overview, and anyone who couldn't make it live and is watching the recording, thank you for your support. Alright, so let's hop into the charts, see what's going on with the Dixie. So looking at Dixie, as you can see, we're having that pop up finally. I've been screaming about it for the last couple of weeks. You know, we're going to be trading within this very large support zone, this blue zone here that goes back about 5-7 years, and we're likely going to have that pop up to where I've been screaming 103.65 first. Okay, so I am looking for this level to eventually be hit, and then we should see a slowdown here. However, in my humble opinion, the slowdown will lead to a higher low structure from this consolidation, which was bullish, that will then lead to another continuous move up to the descending downtrend line here. Okay, the daily downtrend line coming back towards 105. Potentially higher, coming towards the monthly bearish fair value gap, but we'll have to see how price looks as we potentially get up towards these levels around the 104.5 to 105 area. Okay, so overall it's been going as expected with the US dollar. We've been ping-ponging off of this monthly bullish fair value gap for quite some time, and we really took our time to really build out this bullish consolidation here. Okay, now again, if you're hearing my dog right now, sorry about that, he's barking my other dog. But overall, I'm very happy with what I'm seeing from the dollar because it's going as planned. And again, you had the hints, not just from me saying it, but what have I always said about consolidations? When they are grinding towards the downside, so when they have a grinding structure towards the downside, that is your indication that there is most likely a bullish bias, because smart money is slowly accumulating while dumb money is slowly selling out and getting kind of, ping-ponged in here, going long and shorting and all this store stuff where they're just losing money on both sides. And the same thing to the upside. When you have a slow grind coming to the upside, you're getting smart money letting go of their position and opening up smart shorts slowly. So this was a clear indication to me. I do not know why people were bearish on the dollar, at least in the short term. Maybe long term you can be, but short term, if you were bearish on the dollar, you just, in my opinion, it just shows you don't know how to reprice action on a smaller time frame basis, in my opinion. Sorry, but this was very clear. Okay, now let's go towards the Dow. So let's take a quick look at the Dow. So Dow so far respecting the strength from the dollar. Now it is pretty impressive to see how it's been trading. Considering how strong the dollar is starting to get, this has not been too bad towards the downside. I do think we're going to still see more downside if we get continuation early in the week with the dollar strength, which that's what I am seeing. So I am looking for, ultimately a move back down towards 32,500, 32,400, around this zone, and then we'll see if we can get that higher low from the lows we made in 2023 here in March, to then maybe lead to another move up. Now, let's say the dollar doesn't get, weak early this coming week. Well, I have that path kind of laid out here too, where we'll still trade within this larger bullish fair value gap here, but we will quickly see a pop up and then essentially make another move up towards these high pivots here. Okay, so we have both paths here. I ultimately still think even if we come down here, we're still making our way back up. So I have a more bullish bias towards the Dow, midterm per se. But short term, I'm still looking for some downside. Now, if the dollar does start to break past that daily downtrend line we were looking at, then 32,400 probably won't hold, and it's going to come back down towards the lows, and that'll be a very difficult challenge for the bulls to hold this level. I wouldn't really bet on it, but either way, we'll cross that bridge should we get there. Short term, just look for some downside as low as 32,400 or as low as about like 33,000, and then we'll see if we consolidate there. Next is S&P. So S&P Actually, very impressed with S&P as well. Really holding on as best as it can, tapping into this bearish monthly fair value gap multiple times. But I do think it's likely going to give way if we do get that one last week of strength in the dollar coming here. We'll probably see it take these lows and coming back down towards 4,000. And ultimately, I do see the S&P coming towards this circled zone around here, about 3,950 to about 3,900. So around this zone here is where I ultimately see it. And then eventually, just like the Dow, I see it breaking up, taking these highs, filling out this monthly, or this could be a weekly fair value gap, and then potentially going after the pivot here, grabbing all the liquidity above that level. So I do see that being a possibility. This, this line that's just pointing down is just a worst case scenario. Let's just say something unbelievably bad happens. You may just see the S&P break down back into the fair value channel I have here. So it's actually pull out here so you can see. So this fair value channel is where I do think it ultimately gets to in a couple years. This is a channel where pretty much since the beginning of the S&P, it's kind of just traded within. It's a very healthy channel. So it coming back into here is not a bad thing. It just means we're probably getting back to a healthy growth phase. As you can see, we've been parabolic pretty much since prior to COVID, the COVID actually hitting the U.S., but once the lockdowns hit and the Fed just started printing, we just went into a parabolic phase. And now we're pulling off of that now over these last year and a half or so. So if something horrible were to happen, let's just say like the Fed just continues to hike rates and just keeps going and going and going and going, and there's no end in sight, you'll eventually see a major breakdown coming down to here, or something unfortunately happens existentially, like war-wise, God forbid, but there is a possibility that can happen. So I do have that on the chart. Ultimately, though, look for the S&P to break down. Okay, I am looking for it to take these lows, come into these fair value gaps, and then I would be on alert for some sort of sign of a pull back up, whether over here or towards the circle zone over here, and ultimately coming back towards 41, 4,200, and potentially even higher, like 4,400. All right, next is NASDAQ. So let's take a quick look at the NASDAQ, see how that's shaping up over these last couple of days and weeks. And compared to the Dow and the S&P, as you can see, NASDAQ has just been pulling up pretty well, came into this fair value gap, pretty much filled it, and now starting to show some weakness. But risk on assets have surprisingly done fairly well, or at least the blue chips, so like the Metas, the Googles, etc. They've done pretty well, and a lot of that is going to pull the NASDAQ up just because tech is so heavy in this index. So I am impressed with it, but it is fairly expected considering the environment we're in. But if the dollar does have a strong week this coming week, then look for this to pull back, and I think very quickly you'll see this break under these lows coming back towards 12,500. This green zone should play a role. I don't see this just breaking through here. I do think this bounce here could actually be more significant than what I've drawn here. Like a move all the way back up to like 12,800, 12,900, maybe even towards the top of the green zone again. But in the end, we'll likely break down from this green zone and start filling out the imbalance here, and maybe even threatening these lows. Because you have to remember the NASDAQ is very extended in either direction. It's just the nature of it. It's going to be overextended to the upside, and it's going to be overextended to the downside in any sort of trend. That's just how it works. So do not underestimate how high or low the NASDAQ can get when you're measuring it relative to like the S&P or the Dow. Okay. All right, next is oil. So oil's been pretty interesting to watch. This had a very interesting move pretty much since we've had the supply cut from Saudi Arabia. It's had a pretty interesting profile. So we had a nice pop up from the supply cut, tapped into the fair value gap here, failed off, and just pretty much streamed down since. However, as you can see, I've marked here, a potential higher low structure was going to form, in my opinion. We actually had a crazy wick down to take these lows, and then we've kind of popped up since. We need to observe this more. So we need to see, is this going to actually create a consolidation here and try and create this higher low structure and have kind of like a slow grind to the downside? If that's the case, I would be a little bit more bullish in the short term. If not, if we see something like this, where we kind of grind up like this, then I would actually have a very bearish bias on oil in the short term to midterm, looking at a move sub $60, like maybe 55 to 58 bucks. However, not much has changed in my macro view of oil. So over the next decade or so, pretty much since 2020 all the way until like 2030, I do think by 2030 or 2028, I should say, you are going to see oil higher than where it is, significantly higher. Nothing has really changed for that, for my opinion, to change there. For my opinion to change, we're gonna have to see this get to like sub $40, and I really don't see that happening. Again, you can kind of get my idea when you look at it from a monthly perspective, a monthly chart perspective. I think it's very clear as to why I'm bullish. Obviously, break up from this downtrend line that's been there since 2008, and now we are retracing back on the monthly into a major support zone. Again, very, very similar to the dollar. This is a multi-year support zone, and if we were to break it, we're coming back towards a descending trend line if we hold it, which is basic market structure. Okay, so if you had a bear market structure and now you have a potential bull market structure, if you come down and hold this, then it leads to a bull market cycle. Okay, so that's basic. It doesn't have to do that, but it's definitely in the cards. That's why I won't be really that bearish for a very long time until oil tells me to, and I can't be. Okay, I can't be when I look at it from a macro point of view, a very long-term point of view. But short-term, we actually may see some bearishness continuation if we do have this rising structure kind of form here. Then we're starting to look at like a bear flag structure, just a grinding structure to the upside. So, we're going to watch this very closely. But overall, oil is still trading within this major support zone, just like the dollar. We have to give this a lot of time to kind of mature out and see where it wants to go. Next is gold and silver. So gold has been extremely impressive. I do think that it's trying to build out. This looks like a really powerful topping structure, potentially starting to build out. If you notice very closely, it's starting to potentially round here, right? So if we get a couple more days and weeks of continuation to the downside, sort of like this, making another lower high, then we're going to start looking at a rounding topping structure. Okay, so we are getting towards that point where watch out for gold to potentially have a major reversal to the downside. And if you look closely, if you just follow the pivots to the upside here, it's just been really respecting this like ascending trend line here. So I do think we're nearing the end for gold's rally in the short to midterm. Now, it's been a very bullish rally. I am looking for it to potentially make its way back sub 2000 again, back towards 1900, and then potentially lower. But it has been extremely impressive. Now, if a lot of fear enters the market again, watch for gold to hold steady. I do not think it's going to immediately break past its new all-time high. I do think that's going to hold for some time, but I would not be surprised if we consolidate here for a very long time if the fear remains. Okay, if the fear remains, and the way the fear will remain is if the Fed continues to really position itself as we're going to keep raising rates, and then obviously if this whole debt ceiling fiasco doesn't get settled, gold is going to perform even better than it has been. Okay, but even if it pulls back, I would still be very bullish. I would be looking for long-term positions or mid-term to long-term positions to go long gold as it pulls back. So 1900 area would be the first zone I'd be very interested. Then back towards like the 1814 to 1800 area would be the next level, and then anything down here super bullish as well. Like, you want to look at gold as being, this is going to be very strong for the next coming years, because it's, again, very similar structure here. Okay, very similar structure here when you compare it to the dollar and oil. Okay, so again, you got to be bullish on this stuff, guys. Do not underestimate how high it can go and how long it will last. I'm telling you, you're looking at 10 years from 2020 until 2030 of gold, silver, dollar, oil. All this stuff is going to just go up. Okay, all right, next is silver. Silver had a much cleaner rejection compared to gold. Just filled out all the liquidity zones as it rallied up. And just like gold had this like swing failure pattern, slight higher high, and then failed right off. But unlike gold, had a much more decisive breakdown. I foresee gold to do this if the dollar's going to have a strong move this week. If it's going to stay relatively stable and tame, then I would be very surprised if you see gold do something like this very quickly. Okay, I do think gold will probably just grind down more so, but other than that, I do think ultimately silver's kind of showing you the way, what you can expect structure wise for gold. Look for continuation to the downside, and to me silver is showing you that it's likely going to have continuation. I do think, as you know, this fair value gap here got filled, but this imbalance all over here, the small liquidity zone right here at 22.85, look for that to get tapped, and then probably like a pop-up might lead to consolidation, and eventually you'll probably have continuation getting back towards $22. Okay, now let's take a quick look at Bitcoin and see how that's been performing. Crypto's been pretty interesting. If you're in the swing trade service, you know that we've actually done pretty well. We transitioned long on most of our crypto portfolio. So just real quick, as you can see here, we have only 3 shorts left. They're all in the green right now. I've decided not to close them because I'm being patient with these 3, and then we have all these longs here, which are either in the green or slightly in the red or about break even. So everything's looking pretty solid today. And what I'm looking at with Bitcoin, it looks good to come up again, potentially back towards like 28, maybe even 28, 5ish. But I would be stressed to get too bullish. I would also look for this to make a lower high again, from these highs over here at 30,000, and then break down further and ultimately get back towards about 25,000 to 24,000. Once we're in that zone, should we get there? I don't want to talk in definites, but if we should get there, which I do think is the most likely path, that's when I would be on watch for a significant reversal to the upside. Now, I'm not saying it's going to just fly up to like 40,000 or something, but I would be looking for about a 25,000. I would look for probably about $5,000 to $6,000 rise in Bitcoin, so getting back towards the 30 area, maybe like 28, 29-ish area again. That's what I would be looking for. But you have to be very, very careful looking at Bitcoin, because if we look at the monthly chart, all right, so I've been watching the monthly chart as well on Bitcoin. I want to see how this monthly candle closes. Now we have 17 days, right? So we had a nice little rally up. Let me go put this on log, make it a little bit clearer. So as you can see, we had this nice breakout, but we rallied up, had a nice, a fairly decent doji here. I want to see how this monthly candle closes. Now, a key level for me is actually going to be last month's low. Okay, so I have this month's high. This is March. I have March's the high of March marked out. As you can see, price really respected it. Failed off of it about 2 times off of a monthly closure. So we had April fail to close above it, and then this month so far has failed off of it. So that high is very significant, the high of the month of March. And now I'm looking at last month's low, and that's where we're currently trading, right? So if we actually close this month's candle under last month's low, we have a bearish engulfing candle off of a bear doji after about a pretty good surge. So that's pretty bearish. If that should happen, my target's going to change from 24 to about 20,000, to be honest. So around the 22s to the 20,000 zone, that will significantly increase in probability should we have a bearish engulfing candle here. And the more decisive, the higher the probabilities get. Like if we have a slight closure below this low, it's still bearish engulfing, but it's not as definitive. But if we were, let's say, significantly close under that low this month, then it's very definitive that we're looking at 20,000, 22,000. So you definitely want to keep around the monthly chart here. We have about 18 days, 17 days left on it. Now, if that happens, it doesn't mean Bitcoin's going to 12 or 10. Not calling for that, but what it does imply, if we're going to stay bullish, we are looking at a much larger consolidation on the monthly, right? So we're looking at something that's going to consolidate for a very long time, and we are coming into the halvening. So that would potentially lead to a consolidation all the way until the halvening for Bitcoin. So, we got to keep this in mind, really respect the monthly chart. If this happens, we do have to change our perspective on how we're going to trade crypto. Now, it doesn't mean that it's going to be harder. It actually means we're just going to have to be a little bit more nimble, where we're going to get in and out more often, because you're starting to get into a much larger range structure, consolidation structure. And as you get further along into it, the tighter and tighter the spreads will get. So it means less movement. All right, so we're just going to keep our eye on it. We have a potential structure that may get built if this gets too bearish this month. Now, if that doesn't happen, and let's say we just close within this, within the candle here, doesn't mean that we're going to be bullish. It just means that we have a higher chance of consolidating up here. And the longer we stay up here and consolidate, the more bullish it becomes. Okay, so if the bulls can hold this general zone, that becomes extremely bullish. So if you're able to hold this out for weeks to 2 months or something, that's extremely strong. But again, that's a lot of work. It's a lot to ask for. It's much easier for a price to come down towards the 24s, 25s, hold that, and then bounce up. And that's the most probable path. So real quick, the least probable path, in my opinion, is actually consolidating here. Okay, the most probable path is actually coming down, bouncing, having a little bit of consolidation, and bouncing back up. And then the second, it's actually not that probable, but it's not very impossible either. It's kind of in between. Is we do have a bear move coming down towards the sell side liquidity down here, and then coming towards the monthly key level, almost, again, not coming into it but near it, and then kind of consolidating down here. Okay, so this to me is the second most probable path, the least probable path, and it is the most probable path right here. Okay, so watch that 24K zone, like I've been saying for a very, very long time. Again, I'm not trying to talk crap about anyone, but a lot of people have been very, very bullish, and I'm one of the few voices that I would say I'm not overly bearish, but I'm definitely not bullish either short term. So you got to stay even keeled. Don't let anyone, including me, kind of shape your analysis. If you see something that you are confident in, make sure to mark it, follow it, and then reflect on it and study it, whether you're right or wrong. Okay, because it's all about learning and getting better over time. All right, I think that is everything I wanted to go over. Yeah, that is. So guys, if you have any questions about anything, make sure to leave a comment on the video. I'm always keen to read them. And if you have not joined the Discord, make sure to join the Discord. You'll find the link in the description below. It's also the easiest way to get in contact with me and also talk to a bunch of other cool people here. We have people that are ranging from being experts to being amateurs. You'll find someone here, or many people here, that can help you out and learn with. Definitely come join the Discord, because we'd love to have you. And all right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.